Well, a lot to talk about this Monday afternoon, I must say. The Central Bank of Nigeria, that on Tuesday last week, maintained its benchmark interest rate at 27.5%. That's following the conclusion of its Monetary Policy Committee meeting, like I said, which held wrapped up on Tuesday, July 23rd, 2025. Now, this is the third MPC meeting of the year and comes after the CBN aggressively raised rate by 700 basis points earlier in 2024 to combat rising inflation and exchange rate volatility. The bank also retained the cash reserve ratio at 645% and liquidity ratio at 30%, citing improved macroeconomic indicators. According to the CBN governor, Mr. Opeyemi, the decision to hold rates was unanimous among committee members and shows signs of easing inflation, increased foreign exchange inflows, and a more stable naira. The latest data from the NBS also shows that headline inflation moderated to 22.2% in June, down from the previous highs. The moderation, while partly attributed to recent rebasing of the Consumer Price Index, is also as a result of tight monetary conditions and exchange rate stabilization measures implemented over the past 6 months. Well, let's start our week with Mr. Opeyemi Agbaje. He is the Chief Executive Officer of RTC Advisory Services Limited. He's live in the studio to start the week with us on Business Nigeria. Good afternoon. It's good to have you this Monday afternoon.
Good afternoon.
Thank you so much for coming.
News locally and globally.
All around the world, everywhere.
Around the world,
everywhere.
Yes,
but I think we should start with Nigeria. Let's start from home. After the two-day MPC meeting, I want to say, what were you expecting? Many analysts expected CBN to stay with tightening this rates. I don't know what you were thinking.
I argued on another station that there was more than enough. There was no impulse to ease. The evidence suggested that there was a need for caution. However, I was not going to be too surprised if a modest easing of 0.25 thereabout was done, just to signal that, okay, we're ready to accommodate some easing, but we're not yet ready for. But in the end, I think the MPC took the correct decision. So given the signs we saw, and I used the same word that the CBN governor used in his conference, in his press conference, given the signs we saw that this inflation appears stickier than we think. It's not falling rapidly. And then there's month-on-month increase, actually, in inflation, which suggests that inflationary pressures are still strong. And I think the culprit may be the fiscal space. So we're expanding fiscal spending, and therefore, all that the CBN is doing on the monetary side is not sufficient to cause a rapid decline in inflation.
It's some good news from him. You know, he talked about our reserves blowing out at about $40 billion. I think that's some good news. 8 banks have also been able to achieve the recapitalization requirements, and more are coming in. So FX market, external reserves, banking sector, what do you make all around this?
Well, the market, we were worried with the talk of forbearance, but now that has been countered by the fact that many of the banks responded, gave their plans for capitalization, assured that they will soon be out of forbearance. And then, like you said, the news around the 8 banks qualifying for the minimum capital. Generally, economic conditions are better. I am not too impressed, let me be blunt, about the fact that the foreign reserves cost 40 billion.
Okay.
We thought we could have cost 40 billion much earlier in the year in our review, in our projections for 2025. And the reason was that we more or less reached 40 billion by December 2024. More or less, we had 38 billion.
Yeah, 38.
And then we did the Was it the bond offer also that got, Euro bond offer also that got $2.2 billion? So in our own internal analysis, we saw 40 billion much earlier in the year. And we do argue that the fact that we're just getting to 40 billion suggests that maintaining the value of the naira has come at a cost. So we actually believe that, but for the fact that we're trying to keep the naira at current levels, around 1,600, 1,005 something, that we may have crossed onto like $42 billion by now. So
one way or the other, we're still trying to manage it. You think it's not appropriately priced?
Is it appropriately priced? That we can have a debate about that.
About that, really?
Yeah, we can have it. I think if CBN, and I'm not saying the CBN is wrong, there's a value to stabilizing the currency. So it's a trade-off. Economics, as I've come to understand, is often about trade-offs. You make a choice. You decide what is important to you.
Yes.
So do I want my currency to be stable or do I want to accumulate reserves? It's a choice. It's a trade-off. And I think in 2023-24, we voted for reserve accumulation. Correctly, in my view, because we were in an emergency. The reserves had come to such a shockingly low level. There was no confidence in the country's economy. There were no reforms. We had come out of a discredited economic management model. And so it was important to build confidence at the expense of the exchange rate. That was another trade-off. And so we devalued the currency. We allowed reserves to build up. And then we got confidence. And now we held the currency stable for 6 months. But the reserves did not grow in that 6 months. That's the way I see it. So it's their choices, and so far I think they are choices that I think are proper.
Global issues were also identified, of course, in that communique and what it means for us. We see the tariff is still back, the tariff issue. I think August 1st, we're still expecting some tariffs to come in.
Well, Trump has won the battle, more or less. So the deal he announced with the EU yesterday, and the ones with Japan, and the ones with Indonesia, Philippines, all of them, they're astounding. They just show that, hey, Trump has got all he wants. I mean, in fact, when the EU chief, Ursula von whatever, was talking about that, yes, we needed to rebalance the trade between she sounded almost like Trump. She was making Trump's argument for him. And then the US is putting a 15% tariff on all EU goods in return for a 0% tariff, and is even getting investments, $600 billion, arms purchases of an unspecified value. It's amazingly, all the deals, with no exception, have been amazingly what Trump wanted. So I don't think there's any, I think everybody will sign on to the Trump's tariffs. And the U.S. is in for a huge revenue surge just from tariffs. From tariffs alone.
But another interesting one, you know, we saw the...
Now, what our own deal will be...
Yeah. And what does it mean for us? What implications directly at the moment?
It's beginning to look to me like that. When he initially announced the tariffs, he announced the 14% for Nigeria. I think that should be a given. I suspect that we'll get something around that 14, 15. But we are not the threat. So I guess from the U.S. point of view, Africa may just get away with a 14, 15% tariff. Except if there are geopolitical considerations for which you might get a worse tariff. So for instance, I don't know whether it is true that the U.S. has been making certain requests of Nigeria and other African countries in relation to deportees and amnesty seekers and those kind of things. But if it is a purely trade decision, I don't expect a tariff that is worse than 15%.
let's move to staying with MBS during that week too. After we waited for a while,
yes,
and finally they came up with the rebased GDP, and I would say everyone I've spoken to after that saying they were expecting something more.
I was expecting something more.
We're looking for we're heading for $1 trillion economy.
Yes,
and look at where we are at the moment.
Yeah, so yes, I certainly thought that whatever rebasing we did will take us to number 2 or at worst number 3 in Africa. I thought that the size would be bigger. But what we've just been reminded of is that so there was the benefit of rebasing, but there was the counter of currency conversion.
Yeah.
So we've just been reminded that devaluation has its cost in terms of your global economic positioning. But for me, rebasing the economy is taking a picture. You know, when I have some pictures on some of my slides that people like, you know, and then when they see me, they say, but you are older now. What they don't say is that you are not as handsome as before. but they say you are older now. And that's what rebasing is. Let's take an accurate, a current picture. It is more, so for me, there is value in rebasing, whether or not it moves your GDP. The fact that you can have a more accurate, more current picture of your economy. You see digital economy that was not that pronounced before. You see the pension industry, the pension fund managers. You see things that were exactly. So, I mean, I was even shocked to see that we were not measuring Nigerian Social Insurance Trust Fund, NISITF, which had always been there. So the accuracy of the data, the currency of the data, that is the value for me. Now, if it shows you things that are good, well, that's what you look like. That's the picture I took. And if it shows you, so the fact that we didn't get this large enough boost to GDP like we wanted, just reflects the reality. We devalued our currency. And we did so, it was a choice. Now that's the trade-off.
What this means, what does it mean for, say, investors, other countries that, you know, that we're waiting, or other industry watchers waiting for these figures all the while?
That's precisely what it means. It shows them, okay, these are the shifts that are going on in the Nigerian economy. So it shows, for instance, one of the biggest revelations of this rebasing was the size of the real estate sector. Now, that's an industry that stores value in the Nigerian economy relatively. Real estate investments hold value, at least relative to many other sectors, which therefore was not too surprising to see the real estate sector become Nigeria's third largest economic sector. Huge. 13% of GDP, according to the rebate data. So those you also, like we said, we mentioned the digital economy space, the pension industry, all of these. I looked at the manufacturing sector just this morning, and I saw radical differences. What would you expect would have changed? Well, refineries are now 27% of Nigerian manufacturing, from less than 1%. Are you surprised about that? Of course not. Dangote refinery has started operating. So that currency of the data, the fact that the data you see reflects something that is real, as closely approximated as possible to reality. There's economic value in that. Industry watchers, analysts, everybody gains from having a more accurate data.
Nigeria being number 4 on that list now is something that I also talked about this morning. I am a bit worried about that. Even when we're looking at the AFCFTA, our role in that market and all of that. Does that also mean anything for us?
Well, so I looked at that data, and I was not even thinking about you. We were thinking of something else. But I think we can easily overtake number 3, which is Algeria. Now, number 1 and number 2, there's some distance between us. South Africa and Egypt. There's some distance. We have work to do. And because of our exchange rate, remember that we didn't go to number 4 because our GDP reduced. We went to number 4 because we devalued our currency. So that's a currency matter. In terms of local value of our economy, there was a significant boost around 100 billion naira and maybe $62 million in terms of increase in the GDP. But hey, the exchange rate is now 1,600. It was 400 or whatever.
Okay,
so every time you convert your GDP into dollars, there's a penalty, and that's the penalty we're taking. But I'm sure that if year or two, all things being equal, we'll strip past Algeria, and then we will now have a battle with South Africa.
Many believe we seem to have gotten to that point where that curve starts to decline. Talking about inflation curve now. And if that continues to happen as we move towards the end of the year, the next meeting is in September. I'm talking about now the MPC meeting. What do you think would shape decisions?
I think that I think the definition of our inflation challenge is getting to a crunch. I actually worry more than I used to. I used to be quite confident that we could end 2025 below 20% inflation. We have come to 22. But I now see, especially month-on-month increase in inflation last month. That tells me that the declines we can get from having stabilized the currency, we probably have taken. The declines we can get from fuel subsidy normalizing, fuel prices normalizing, we probably have taken. So we probably are dealing on one with the inflation effect that may be tied to security. And then more importantly and more worrying, inflation that is being pushed by fiscal factors, spending. Now that's another trade-off. The government has chosen, again I agree with them, to spend more on infrastructure, on roads, and not to be constrained. And the philosophy of this government in terms of the fiscal is very clear. We will not be constrained by current earnings. We will, they have an expansionary fiscal mode. So that inherently conflicts with the posture of the central bank, which seeks monetary stability. And so there's a fundamental conflict at the policy level, and it may amount to a trade-off that we will have to accept, that we may have around 20% inflation into the medium term.
As much as I also am in support of spending on infrastructure and all of that, well, I would ask you again, the fallout of these reforms, the vulnerable ones, where do we, because if we don't grow as much as we should grow, more people continue to drip into poverty line.
Yes, so I totally agree with you from the mindset of, so that means the implication of that is that we are not going to help the poor simply by trying to reduce inflation. That inflation may not come down that much. So we would have to take concerted action on a policy level to help the poor and the vulnerable. So we would have to focus on real actions we can take that may even be fiscally expansionary in some cases and therefore contribute to inflation pressures. But we would have to focus on, I must concede that we have to be, sometimes when I read some analysis and some criticisms of the government, we act as if poverty and unemployment came to Nigeria in 2023.
Yeah.
It didn't come in 2023.
No,
it's a long-term phenomenon. And so we would have to be a bit considerate of government's pressures, but also insist that government has to go on looking at real ways in which it can help the poor and vulnerable. And to be fair to them, they are already doing some of that. So, for instance, when you do NEL fund and you are providing loans to students, that's a practical, pragmatic way of helping the poor and vulnerable. So what else? Microcredits, what else? Credits,
the credit calls,
culture.
Yeah.
I mean, what's that? Credit call. So what else? Maybe roads, rural roads. What else? You know, we have to keep on that dynamic of looking for practical ways by which we, because inflation seems to me like it will endure around 20% into the medium term.
So in totality, as we wrap this up, we can go on and on. I know, interesting conversation as always. What's your outlook for the economy? I always like that, getting that outlook. And of course, I think we have that handshake between the fiscal and the monetary.
So there has to be a lot of conversation moderated by the president between the fiscal and the monetary side. We have to resolve strategy and agree that, look, in the medium term, where our objective is to grow infrastructure, and therefore we're not going to tighten. We can't, in any event. Politics also has its dictates. We're entering into the electoral cycle.
2026 is
so
just
we're not going to
election.
tighten. We're not going to tighten spending. So therefore, let's agree on what is doable and what we can do, and so that we have one strategy, not two conflicting strategies. Now, in terms of outlook, but let me insist, as I have for quite a while, I think the things we're doing are necessary, are appropriate, and increasingly are more sure-footed. So at the beginning, we worried about execution, about timing, about sequence, but I think that we're more sturdy, and the impacts are showing. However, we all concede, and we're all worried by the fact that for those who have been harmed by these predictably, these policies, especially the ones around subsidies and currency values, were predictably going to hurt the poor. It's not an unintended, unforeseen side effect. So we must continue to invest in how we might ameliorate poverty, or generate employment, provide social investment, provide help for the poor and the vulnerable.
Mr. Opeyemi Agbaje, I must thank you so much. Chief Executive Officer, RTC Advisory Services Limited. Let's see how all of this plays out as we move on. I'm watching. I don't think that there might be any shift to that next meeting. Maybe they will still want to hold it.
Yes, and in fact, let's just hope if you see month on month, for me, the most important
is the month-on-month inflation.
Was that increase in month-on-month.
Yeah.
So it just means that, hey, you can't.
Man is shouting. LCCI is shouting. They are crying. They can't get funds from banks.
Yeah.
Because of the rates.
The rates. Yeah.
Well, I must thank you so much again. CEO, RTC Advisory Services Limited. Do have a great week. Thanks for joining us on the show. We appreciate this.